Today, Operation Anti-spruik, Episode 4. Hello again, it's Martin North from Digital Finance Analytics World Notice Post, covering finance and property news with a distinctively Australian flavour. Well, while the real estate sector still spruik to high heaven, the truth is rather different, and thanks to Cookie Boy, we're going to go through some more recent examples of price falls and also interspace that with analysis from my models. And just quickly, for those who don't know, my models essentially pull information from various sources, including our customer surveys, and we can model the impact of that down at a postcode level. And by looking at this in a granular fashion across various segments and geographies and property status types, we can form a view as to what's going on, and we can also overlay some scenarios thinking about where prices might be moving. And that allows us to take information around mortgage stress, the home price trajectory, the buying and selling intentions, the migration data, and economic and CPI wages and employment, all of those things, put them through the core market model, through the scenarios, and that allows us to then look at it down at a postcode level or higher up. Now, this is a point in time, of course. It will change, but it does give you a bit of a sense of trajectory. And also, as I keep saying, there is a very strong correlation between price drops and the level of stress in a particular postcode, as you will see as we go through. And just before I start, a quick reminder that if you want a one-to-one conversation about a particular postcode, we do offer that through our one-to-one service. And it's the same sort of argument, but it's an individual conversation. It's a confidential conversation with me. I can't give specific financial advice, but I can talk about the data for that postcode and look at the underlying trends. And I can look at stress, home price, trend data, and also some views as to where prices might move, depending on those scenarios that I touched on. Now, it takes about an hour, and we can do that via Zoom or by phone call. There is a cost involved because of the research I have to do ahead of time, $250 plus GST, and that's payable in advance so that I've then got time to do the research. And there's a 3 to 5 week waiting list at the moment because spaces are limited. But if you want to get more information, then you can go to the DFA blog and make contact there. Anyway, now let's look at a few examples of prices that have dropped, thanks to Cookie Boy. The first one is Cobargo in postcode 2550. And this particular property was listed on the 13th of May for $720,000. It's now dropped down to $678,000. That was on the 13th of July. Quite a big property, 5 bedrooms on 1,214 squares. And here's another one in the same area. This is actually in Wallagoot. And here the price was $1.2 million on the 28th of April. It's now dropped to $1 million on the 15th of July. And this is a 4-bedroom place on significant plot, more than 5,000 square meters. And one more, this time at Tarraganda, again in the same postcode, 2550. This is a rural property on 1.5 hectares. And it was at 1.8 million on the 18th of July. But before that, it was listed on the 22nd of February at $2 million. So considerable falls in all of those price areas. And another one here at Taratha. This is again vacant land and a fall from 800,000 on the 7th of April to 750,000 on the 15th of July. 556 square meters. And I've noticed in other areas too, land is dropping in price. Now, let's just look at the data for this particular postcode, 2550. And it is quite a large area, actually. Quite a few suburbs are included. There are more than 7,700 households in the area and around 2,600 borrowing more renting actually, and some investors as well. Significantly, the stress levels are at 45.8%. Those are people with mortgages. Rental stress is at 60.5%. And overall household financial stress is more than half of all households. And looking at the trajectory ahead, and we run three scenarios. Our best case, that assumes that everything goes well, inflation gets controlled, rates come down, and we get migration coming into the country pretty quickly to support house prices. The base case, which is a bit of a fall because inflation is more stubborn, rates are higher for longer. And the worst case is rates significantly higher, inflation remains high, and we have also issues to do with, for example, economic problems with China and other places offshore too. You can see over the 3 years that the best case scenario is pretty much line ball, actually a cumulative 1.7% over 3 years. The base case, which is probably my more likely scenario at the moment, is a fall of 21% over 3 years. And the worst case, if things went all pear-shaped, is down 39.7%. I'd also highlight the fact that whilst the gross investment return in this area is around 3.5%, the net investment return is only 0.4%, which is extremely low. So a lot of property investors are essentially losing money. One reason why we do have about 34.7% of stressed investors in the area. Now we'll look at a property in Eden, 2551, just down the road. And this was a 3-bedroom property on 760 squares. It was listed 203 days ago on the 29th of December 2021. On the 5th of May, it was priced at $870,000, but on the 15th of July, it was $845,000. And if we look at the data for this particular postcode, again, we see high levels of mortgage stress. About half of households here are in mortgage stress. There's even more renters in rental stress. And also we've got stressed investors as well. And the households in financial stress overall is more than half. And if we look at the scenarios, the best case scenario over the next 3 years is a slight fall, down 0.6%. The base case is a fall down of 24%. And the worst case is a fall of 42%. And that's partly because of the significant run-up we had previously. And from an investment return, 3.5% is the gross investment return, but the net investment return is 0.1%. That's why so many households who are stressed investors are being shown up here. Now we'll go to Marimbula and postcode 2548. This property was listed 210 days ago on the 22nd of December last year. So on the 2nd of March, it was on at 1.395 million. Now on the 18th of July, it's dropped to 1.25 million. 3 bedrooms on 1,347 squares. And if we look at the data for this particular postcode, first observation is there is very little mortgage stress. There aren't that many borrowers actually. There are a number of rental stressed people, and there are also investors who are struggling to make returns. Looking at the projections over the next 3 years, on the very best case scenario, we might see a rise of 8.6% over 3 years cumulative. The base case, though, is a fall of 15%, and the worst case is a fall of 33% over the next 3 years for houses. And from an investment return perspective, 3.4% is the gross investment return, but the net investment return, that's after things like mortgages and repairs on the property, are 0.3%. So property investors won't be making much on these properties. Then we'll go to Pambula, postcode 2549. And this was listed 259 days ago on the 3rd of November 2021. It was price guided at 2.75 million. Now it's at the 2.5 to 2.6 range. It's 5 bedrooms. It's 2.63 hectares. And looking at this particular story, we then go to the postcode, very small postcode household count, but nevertheless 1/3 in mortgage stress, 1/3 in rental stress. some stressed investors. And from a scenario perspective, the best case scenario over the next 3 years, if everything goes really well, is 8% higher. The base case is down 15%. The worst case is down 33% for houses. And the gross investment return is about 3.5%, but the net investment return is 0.4%. Now we'll go to Kiama, postcode 2533, and this property was listed 82 days ago on the 29th of April. And the price back on the 19th of May was 3.4 to 3.6. Now the new price is 3.2 to 3.4 million. It's got 4 bedrooms and it's on 601 square meters. So here's another property in Kiama, 2533. This was on the market on the 27th of May with a price guide of 2.45 to 2.65. It's now, as at the 16th of July, at 2.35 to 2.55 with 3 bedrooms, 1 bathroom and on 677 square meters. Here's another one, this time at Kiama Heights, again postcode 2533. And this was listed 70 days ago on the 11th of May 2022. The price guide was 3.5 to 3.85 million. Now the price guide is 3.4 to 3.7. 5 bedrooms, 610 square meters, and it's a house again. And if we look at the data for this particular postcode, there are around 7,000 households there, 2,400 borrowing, slightly more renting. And we see that there's 40% in mortgage stress, 76% in rental stress, so that's a significant problem. As a result of that, the households in financial stress is 54.2, but also stressed investors are at 36.5% of investors. And if you look at the scenarios there, there's almost no growth over the next 3 years. It's pretty much flat in the best case scenario. If property prices go to the base case, they're down 23% cumulative over 3 years. And the worst case is down 40% over 3 years for houses. And from an investment return, it's 3.5% as a gross investment return, but the net investment return is just 0.2%, which goes a long way to explain the high level of stress amongst investors. Now we're going to Coal Cliff, postcode 2508. This one was listed 114 days ago and was on the market for $2.9 million. It's now dropped to 2.795 million. 4 bedrooms, 950 squares. And again, it's a house, of course. And if we look at the data on this particular postcode, slightly smaller postcode count in terms of households, but quite a lot of borrowing. And in fact, quite a few of those people with a mortgage have mortgage stress issues at 86.7%. That's a very high number. The rental stress is also very high at 66%. The investment story is not so severe, but nevertheless, household financial stress is at 72.6%. And if we look at the price scenarios over the next 3 years, even on the best case scenario, there's a slight fall. The base case is a considerable fall down 25%, and the worst case is a dramatic fall down 43% for houses. The gross investment return is just 3.2, and the net investment return is negative 0.5%. Now we'll go to Coaldale in postcode 2515. And this was listed 157 days ago on the 13th of February 2022. On the 27th of April, it was at 4.3 to 4.8 million. On the 18th of May, it was 3.7 to 4.2. And as at 4 days ago, actually on the 16th of July, it was 3.5 to 3.8. So a considerable fall there. And this was a 5-bedroom, 5-bathroom house. And if we look at the data for this particular postcode, we can see that there's 4,500 households in the area. and the borrowers in stress is at 35%. The renters in stress is 50%. There are some stressed investors, and the overall levels of financial stress is 46%. And the best case scenario is a rise of about 3% over the next 3 years cumulative. The base case is a fall of 21% over 3 years. The worst case is a fall of 39%. And interesting again that the gross investment returns about 3.5%. The net investment returns just 0.2%. Now we're going to Wherry Beach, postcode 2534. And this particular property was originally on at 2.8 million on the 7th of April 2022. And it's now on the 13th of July showing at 2.6 to 2.75. And the size of the property is 778 square meters with 5 bedrooms, 3 bathrooms, and it's a house. And if we look at the information from my model, not a huge number of households in the postcode and not a huge number borrowing. 30% are actually in mortgage stress. The rental stress, though, is quite high at 75%. We have 39.5% of stressed investors, and overall financial stress is at 56.4. Remember, I'm measuring this in cash flow terms. And in cumulative terms over the next 3 years, my best case scenario is a rise of 1.3%. The base case is a fall of 22.5% over 3 years. And the worst case is a fall of 39.8% over the next 3 years. Gross investment returns 3.3%. The net investment returns 0.4%, which explains why we have so many stressed investors. We'll look at this property now in Shell Harbour, postcode 2529. This was listed 225 days ago on the 7th of December 21. The guide on the 7th of December was 4 million. The guide on the 10th of February was 3.9 million. Now it's at 3.6. And this property is 3 bedrooms, 3 bathrooms, 289 square meters, and it's a house, so it's on a very small plot. And looking at the data for this postcode, quite a large number of households in the area now, and a high proportion with mortgages. And overall, we've got 36% of borrowers in mortgage stress, 24.3% of renters in rental stress. We have some stressed investors, but not dramatically. And the overall household in financial stress is relatively low. As a result of that, our best case scenario is a rise of 10% cumulative over 3 years. The base case is a fall of 13% over 3 years. And the worst case is a fall of 31.8%. And looking at the investment return, 3.4% gross investment return. The net investment return is down 0.5%. And here's one at Bulli, 2516. This was listed 70 days ago on the 11th of May 2022. The original was 4.4 million. Now it's price guided at 3.9 million as at the 17th of July. This has 3 bedrooms, 3 bathrooms, and it's a house. And if I look at the data for this particular postcode, 2,358 households, some borrowing but not dramatically so, some renting, some investing here, 23.1% in mortgage stress, 36.4% in rental stress, 25% of investors in investor stress, and overall financial stress for households, cumulatively speaking, is 29.4%. Over the next 3 years, the upside could be on the best case scenario, 8.7% over the 3 years. The base case is a fall of 15%. The worst case is a fall of 32.8%. And looking at the gross investment returns at 3.4%, but the net investment returns are down minus 0.1%. And just to close out the show, I'm going to touch on a few up in Queensland. This one is actually in Dagon, postcode 4017. It's got 2 bedrooms on 286 square meters. The original was on the 29th of March 2022, listed 113 days ago. It was then on the 7th of April at $489,000. Now at the 15th of July, it's over $375,000, so a considerable fall there. Very small property on a very small plot, of course. And looking at the data, 14,000 households there, roughly half of them are borrowing. 42% of those are mortgage stressed. 44.1% of renters in difficulty. The stressed investors, around 25%, and the overall financial stress in the area is at 44.4%. Cumulatively speaking, on the best case scenario, we could see a rise of 15.3% over 3 years. The base case is a fall of 8%. The worst case is a fall of 26%. And the gross investment returns is 4.5%, net investment returns 0.8%. Here's another property in Queensland, 4034 Geebung. And here there's a 4-bedroom property with 2 bathrooms on 405 square metres. It was listed 144 days ago on the 26th of February. On the 24th of March, it was showing at 855,000 offers over. It's now down to 795,000 on the 15th of July. And looking at the data here, quite a big area, 18,000 households in the area, but 77.5% in mortgage stress, 56.8% in rental stress, some stressed investment as well, and the overall financial stress level for households is 59.9%. Nevertheless, best case scenario over 3 years is a lift of 9.5%. The base case is a fall of 13.8%, and the worst case is a fall of 32%. And from an investment perspective, 4.2% is the gross investment return. The net investment return is about 0.7%. Now the Queensland property here, Coomera Waters, Queensland, postcode 4209, 4 bedrooms, 3 bathrooms. It's a house again. It was listed 63 days ago on the 18th of May. And on the 28th of May, it was on at 1.95 million. Now on the 17th of July, it's dropped to 1.858 million. And once again, looking at the postcode, quite a large number of households in the postcode, some with a mortgage, quite a few renting. The mortgage stress is at 23.9. The rental stress is at 60.7. There are some stressed investors too, and the households in financial stress come out at 55.8%. And from a scenario perspective, best case scenario up 13.9% over 3 years. The base case is down 9.6% and the worst case is down 27.5%. Gross investment returns 4.6%, net investment returns 1.3%. So that's some of the better returns that we've seen in this evening's show. Again, now we'll look at Sanctuary Cove, this one. 4 bedrooms and 5 bathrooms. And it was originally on market 19 days ago. And on the 13th of July, it was on for 2.45 million. Now on the 19th of July, it's down to 2.2 million plus. And here's another one, this time in Helensvale, again the same postcode 4212. And this was on 31 days ago on the 19th of June. On the 13th of July, it was listed at 2.5 million. Now it's at 2.37 million. So we're seeing some considerable falls now up in Queensland, which belies what a lot of agents are still saying about the area. And if we look at the data for that particular postcode, 11,000 households, 5,000 borrowing, 17.1% of borrowers in mortgage stress, 52% of renters in stress, 34% of investors in stress, overall households in financial stress 37.5%. And looking at the scenarios, the best case is still pretty strong, up 16.1% over 3 years. The base case, though, is a fall of 7%, and the worst case is a fall of 25.1%. And if we look at the investment returns, 4.7%, net investment returns 1.4%. So that's another significantly higher return than in many other areas. So here's another one. This is actually at Coomera Waters, postcode 4209. And the last listing was 1.8 million on the 17th of May. 4 days ago, there was a contract collapsed, and it's now at 1.725 million. 4 bedrooms, 2 bathrooms on 778 squares. And this particular postcode, with 16,600 households, 6,900 borrowing, 9,000 renting, 23% of borrowers in mortgage stress, but 60% of renters in rental stress, 37.7% of investors in difficulty, and overall financial stress in the households, 55.8%. Scenarios are that this could rise 13.9% over 3 years. In the best case scenario, down 9.6%, the base case scenario, and the worst case is down 27.5%. And the investment return at a gross level is 4.6%, but the net investment return is 1.3%. And finally, just to round out today's show, postcode 5073 in South Australia at Ross River. And this is a 4-bedroom, 3-bathroom house on 673 square metres. It was listed 101 days ago on the 11th of April 2022. And it was shown on the 12th of April at 2.8. Now on the 11th of July, it's 2.5 to 2.6 million. And looking at the data of this particular postcode, 6,532 households in the postcode, 2,464 borrowing. There are 42.9% of households in mortgage stress, 62.5% of renters in rental stress, some stressed investors, and so overall household in financial stress at 42.7%. There was a rise of 10.9% over 3 months in my best case scenario, a fall of 12% in my base case, and a worst case scenario of more than 30% down over the next 3 years cumulative. And looking at the gross investment returns, 3.9% is the gross investment return. The net investment return is 0.2%. So I hope you can see once again there is a significant correlation between rising levels of stress and price falls. But whether you look at the south coast in New South Wales, or up in Queensland, or even in South Australia, price falls continue. And in fact, according to the data that we're looking at the moment, the rate of price fall is increasing. I may have to update my base case scenario a bit to take into account, because of course things are moving quite quickly as the interest rate rises begin to bite, and as more properties are listed, and as more people decide that it's time to get out with their shirts. I hope you found that interesting. If there's a particular postcode you'd like me to cover, leave it in the comments below and we'll see what we can do. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.